All right, let's dive right into this explainer. Our goal today? To capture the absolute essentials of Robert Kiyosaki's classic wealth building philosophy in 8 minutes or less in English. We're going to take decades of financial wisdom and distill it all down into a structured, highly actionable format that you can actually use. This is the groundbreaking book that literally redefined how millions of people think about wealth. And the whole thing is built entirely on the powerful contrast between two father figures who completely shaped a young boy's mind about money. It's not just a story, you guys. It's a total masterclass in shifting your entire financial paradigm. Here's our roadmap for today. The tale of two dads, escaping the rat race, assets versus liabilities, minding your own business, building your financial IQ, and finally, how to get started. Part 1. The Tale of Two Dads, Contrasting Financial Mindsets. So the author Robert Kiyosaki had two incredibly influential guys in his life. His biological father, who he calls Poor Dad, was a highly educated government employee, yet he struggled financially his entire life. On the flip side, his best friend's father, the Rich Dad, was an 8th-grade dropout who actually went on to build a massive financial empire, becoming one of the richest men in Hawaii. And here's where the mindset shift happens. When faced with something expensive, the poor dad would instinctively just say, "I can't afford it." The rich dad, he strictly forbade those words. Instead, he asked a question: how can I afford it? Because think about it, saying you can't afford something is a statement. It lets you off the hook and literally shuts your brain down like a light switch. But asking how you can afford it, that forces your mind to wake up, go to work, and find solutions. It completely exercises your financial genius. Part 2. Escaping the rat race, the cycle of fear and greed. So why do so many smart, hardworking people never actually get to use that financial genius? Well, because they get trapped in the rat race. You know the drill. It's that endless cycle of waking up, going to work, and paying bills. But the crucial takeaway here is why people get stuck in it. It's dictated by two really raw human emotions: fear and greed. First, the fear of not having money motivates us to work hard, right? Then, once we get that paycheck, greed, or desire, gets us thinking about all the wonderful things money can buy. And before you know it, people are stuck working for the owners of a company, working for the government by paying taxes, and working for the bank paying off mortgages and credit cards. It really all boils down to this one idea. The poor and the middle class work for money. The rich have money work for them. To break free from this cycle, you've got to shift your paradigm. You simply cannot let fear and greed dictate your life choices. You have to step back, become an observer of your own emotions, and consciously decide to learn how money actually works. Part 3. Assets versus liabilities, the #1 rule of wealth. Listen, if you only remember one single thing from this entire explainer, keep it simple. Assets put money into your pocket, liabilities take money out of your pocket. That is the absolute #1 rule. The rich get richer because they buy assets that generate cash flow. We're talking real estate, stocks, intellectual property. The middle class, however, buys liabilities like giant expensive homes, brand new cars, or fancy boats that they mistakenly think are assets. I mean, a new car loses 25% of its value the second you drive it off the lot. It's not an asset. It's literally taking money out of your pocket. Part 4. Mind Your Own Business, Ray Kroc's Secret. There's this fantastic story about McDonald's founder Ray Kroc. He once asked a group of MBA students what business they thought he was in. Naturally, they laughed and said, selling hamburgers, obviously. But Kroc corrected them. His true business wasn't making hamburgers at all. It was owning the real estate underneath the franchise restaurants. The reality is, most people spend their entire lives minding someone else's business, making that person rich. Your profession, whether you're a lawyer, a mechanic, an accountant, that just pays your daily bills. But your true business revolves entirely around building your own asset column. So keep your daytime job, absolutely, but start buying real assets to secure your own financial freedom. Part 5. Building your financial IQ, the synergy of skills. To truly escape the rat race, it's not enough to just be financially literate. You have to actively build and flex your financial IQ. And this isn't just one single thing. It's a synergy of 4 critical skills. First up is accounting. That's your ability to read numbers and understand financial statements. Second is investing, the actual science of making money make more money. Third, understanding markets, knowing supply and demand and what the market actually wants. And fourth is the law. Understanding taxes and corporations is huge because it allows the rich to earn, spend what they can pre-tax, and legally minimize their tax burden. Meanwhile, employees earn, get taxed immediately, and just try to live on whatever's left over.
Well, theory is fantastic, right? But how do we actually get started? If you're currently stuck in a financial hole, how do you put down the shovel and start building actual wealth today?
Part 6. How to get started, taking decisive action. Look, getting out of the rat race requires overcoming some massive personal roadblocks. Things like fear, cynicism, laziness, and bad habits. To beat those hurdles, you have to act deliberately. Step 1. Invest heavily in your financial education first. Your mind is your absolute greatest asset. Don't just buy a stock, buy a book about the stock market. Step 3. Choose your friends carefully based on what you can learn from them. You want to surround yourself with people who talk about assets, not just sports or the weather. But I really want to focus deeply on step 2. Pay yourself first. This right here is the ultimate secret sauce. Most people pay their bills first and save whatever meager amount is left over. Kiyosaki says to do the exact opposite. Force yourself to invest in your asset column before you pay your taxes or your landlord. Why? Because the immense pressure of those looming bills will force your financial genius to wake up. It creates the ultimate motivation to hustle, create new streams of income, and get smarter about money. It completely builds your financial fortitude. Understanding that difference between being controlled by money and mastering it is exactly what changes your destiny. So ask yourself today, are you working for your money or is your money working for you? If you enjoyed this, subscribe to Books in 8 Minutes and never miss what matters.